Financial wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Fronti.
I want to talk a little bit more about loan products. Since that's what you do on a day-to-day basis, I thought we could dig into that and the changes that are coming, the changes we've been seeing, and are they positive or negative?
Well, I love shop talk, so this topic is a great one for me. Sure, yeah, there's been a lot of flexibility that we've seen in new product coming out, and it seems like Fannie and Freddie are starting to take the restraints off what they're doing, so good topic.
Yeah, so on Fannie and Freddie, what he's alluding to is we've seen in the last 6 months, especially in the last 3 months, I would see flexibility when it comes to, I'm going to call it creative tax strategy. Is that a fair statement, Taylor?
It is.
So typically, and and I don't mean to categorize anybody because anybody can have this type of deduction. It's called a 2106 deduction or a employee business expense. But most typically we see it with teachers, police officers. Who else has those? Sheriffs?
Mostly public enforcement.
Yeah, and so I think that this was a move that's going to be helpful for our service-oriented people to be able to qualify for homes.
Sure. I think another situation there is that a lot of times when you're judging a CPA, you're judging a CPA on how much money you're getting back at the end of the year. A lot of clients that I have really don't know what 2106 is in the way that it affects their qualifications. So this has kind of allowed them to get a redo or not be affected by something they may have done in previous years.
So to be clear, if you've been told over the last year or two that your deductions, and you're a W-2 salaried employee, you're not self-employed, but that your deductions were affecting your debt-to-income ratio, and that's why you didn't qualify for a home, now's a great time to reach out, reevaluate the circumstances, and see if you now qualify.
Sure is. I could personally tell you that I've had quite a few clients that I've touched base with over the past few weeks just to let them know. I feel very grateful that they've allowed us to do away with the 2106 expenses.
Yeah, so that's just one of the changes that we've seen recently here at Skyline Home Loans, and that's an industry change pretty much nationwide. Not all lenders have adapted to it. We are a Fannie Mae, Freddie Mac direct lenders, so we jumped right in and took that on right away. That being said, there's other things coming that is even a little more exciting than that, which is like proprietary product.
Sure, so that would be like a bank statement program. So
Right.
Somebody who's self-employed, not a lot of net income at the end of the year, but take on a ton of bank deposits. We're now available to use bank deposits to qualify for a mortgage.
Yeah, and if you've heard of these bank statement programs over the last couple of years, they've always been around even after the mortgage holocaust. However, they just weren't attractive. The interest rates were astronomical. The down payments were astronomical.
Sure.
I mean, it was like 40% down. It was basically a hard money loan.
Right.
And so we're seeing some softening there. And what does one of those look like today, Taylor?
So we would be, they're not 30-year fixed products, so you would be definitely looking at an ARM product, but typically someone in that line of work is going to have more comfortableness with a 5/1 ARM. Interest rates between 5 and 8%. APR similar, probably in the 9-10s.
Yeah, 9 or 10 would be a little high because we don't have points on those loans usually. But I would say that you're probably going to be looking at something in the 6s, right? So
That's
I think
on the ones that are pricing. Yeah, I apologize on the 8 to 9%. I kind of got ahead of myself there.
You know, it's funny. You do say 8 to 9%, and that sounds high. However, there is a product that we have, another one of these flexible products that we have, that is more in the 8s and actually maybe even in the high 7s now. We're seeing rates come down on all these products, right? Because these proprietary lenders said, "Oh, I'm going to release this product," and they released the product with a really high interest rate, and nobody bought it.
Right.
So they're trying to find the market, and we're trying to see those rates come down. The other product that we have is an early access program. So if you're 2 years out of a short sale or 4 years out of a foreclosure, you can utilize this one if for some reason you can't use FHA.
Sure, and all these products are just allowing more and more people to enter the market. So, where all this is going is more buyers per house. So with shortage on inventory as it is, we're going to see even more offers on these properties.
Yep. So you're joining the Don and Gino Real Estate and Finance Show on your hometown station, AM 1220 KHTS, this fine Saturday morning. And Taylor Weiner of Skyline Home Loans is sitting with me discussing loan product. And I think you just teed it up perfectly, Taylor, for what's going to happen is as we right now continue to be in a restricted inventory environment, if we are adding loan product every single day And we know that at the same time we have what we call the boomerangers, which is everybody that's now anniversaried out of a foreclosure or a short sale or a bankruptcy from the Great Recession, as they call it. So we're coming around now, and we've got all these new buyers. And we have the millennials now entering as well, which I know you do a great job with. You know, you understand them. You text at all hours of the night. You FaceTime each other. I don't even know what you guys do. I consider myself a senior citizen compared to you.
No, technology has changed, and so has the mortgage industry. So the way that we communicate is much different now, and I think that we do a great job of being there for our clients and communicating with them the way that they want to be communicated with. Text is definitely a big one, and we're on top of it.
Yeah, it's interesting for me because I resisted for a while. I resisted text. I resisted Facebook Messenger. I resisted all these other methods of communication because it became more difficult to manage, right? And I can't even imagine. I know that my wife manages her cake business through Instagram and Yelp and 72 other websites. And I wish there was just one place, which I used to use email for that, but I wish there was just one place where everything could land and I could manage it all in one place.
Yeah, interesting platform. You might have an idea there.
Yes. So I could retire from the loan business and just work on that?
Right. Can't tell you how many times I call somebody and, the response is a text. So people are going so much further away from the live phone call or even the line person into just streamlining the whole process and with minimal communication.
Yeah, so if you're looking for somebody that's always on top of every single methodology of communication, or text is the primary function for communication, Taylor, what's your number?
Best number to get me at is area code 661-209-0787.
All right, one more time.
661-209-0787.
And here's a funny thing. So here's another function of what Taylor does in his business that's a little different than what I do, is that his number one way for you to apply for a mortgage is online. I still take some traditional applications. I ask you for your paperwork, or I do a phone call, or 100 other different ways. But Taylor says, just go to my website. Just go ahead and log in, do the application. It'll give us a great starting point. And how do they do that?
Very streamlined and easy process. They would simply go to my website, www.taylorweiner.com, www.taylorweiner.com, and complete an online application. It's a big tab on the left-hand side that says Complete Online Application. You click there, go through the process. It comes to me direct, and I get going on your file.
Yeah, so it's an interesting methodology, and we're in a different world of communications now, and everything seems to start to be moving faster and faster and faster. I think that's why we also don't have enough inventory. Builders didn't build enough homes over the last decade because they were afraid to. They didn't have the capital. They couldn't get the loans. They didn't have the resources. So when we come back, we're going to talk a little bit about inventory, a little bit about what the New York Times thinks the best way to build wealth is on the Don and Gino Real Estate and Finance Show on your hometown station, AM 1220, KHTS. We'll be right back.